traders of freetradingvideos.com. This is Breakout Trader. This is a follow-up video of the short example on Google. So part 2, Google short. Okay, so what we went through a couple days ago is placing the order just below the candle's low right here, stop loss just above the candle's high. We said this was our area of first resistance, and this is where we take a profit, a small component of profit. For me, it's 30% right here. We then said, well, based on the weekly chart, we have a support area at 500, and our target would be the filling the gap. Let's take a look at what's happened on this stock since. Yesterday, we get the entry. We'd be basically probably sitting at a small loss or a break-even area yesterday. We would be able to move our stop loss down. For me to move my stop, I take the candle's high plus 10% of the ATR. That's where I set the new stop loss. If we move forward to today, we are now making money in this trade. So let's say, for example, we sold short at 540. We're now trading at 533. Okay, we came down to this 525 area, which means I would take some profit right there. Now, based on what we witnessed today in the markets, VIX spiking to 30, and check this out. Let me show you a little something that I look for market reversals. It gives me an indication. If we come into Yahoo Finance here, scroll down a little, you're going to see View More Indices. We're going to click on that link, then we're going to look at the advanced declines. What this is going to give us is the new highs and new lows on the New York Stock Exchange, Amex, and then NASDAQ. This number right here is what I am interested in. When we see this number greater than 600, that is a bullish divergence. What we also like to see is the NASDAQ not as high as the New York Stock Exchange, telling us that technology is showing strength in relation to the overall market. So this is beautiful for what we want to see. Now, we nearly had what I wanted today, is that big spike down and close up on the day. It was based on news, and it seemed to be a false news event. The Fed's going to help Freddie and Fannie, and no, they're not. So we'll see if that transpires over the weekend. Would not surprise me at all to see that type of news come over the weekend, and then we run up on Monday. This market is showing bullish divergences. It doesn't mean it will move to the upside. We could easily free fall from here. So we don't know. We're going to need more data before we can make that assumption. So this is what I'm looking for bullish divergences. Greater than 600 on the new lows. That's a beautiful, beautiful thing right there, guys. Anyway, back to Google. If we were short Google, and based on what we saw today, I would take I'd probably take 70% of the trade off the table here. Remember, I'm not in this trade. But I would be looking at this based on market internals. This is a big, big reason why I look at market internals, because I can gauge what the strength and the weakness of the overall market is. If I was short a strong company in the market, and the market's starting to show bullish divergences in strength, I want to exit majority of that position and take as much profit off that table, also leaving a small component of the trade on to benefit more if it does continue to break down. At this point, let's take a look. Let's look at volume on this. What is this trading pattern? We've come down to a support level, move back up, we come back down, then we're getting candles with long lower shadows. These are bullish candles because the shadow is longer than the body. You can also see we have decent volume on these candles, which is telling us there's buyers in this market at this price point. We're at a level support, so it's very, very feasible for this stock to go up from here. So if the market does go up, this is a strong company in the market. Do you think this would go up? Very, very possible. Now, Matador, a couple weeks ago, he showed us how to enter into a situation like this without putting a stop loss all the way below the low by using an intraday chart. So also remember, check out Matador's video on that so you could develop your own trade around this if the market is to break to the upside. What we would be trading here is what we call a W trade, or a double bottom. The W stands for winner. The resistance area would be right through here, so we could complete the W formation. Could Google go a lot higher than that? Absolutely, if this market wants to rally. If this market wants to rally. Thanks for attending freetradingvideos.com. This is Breakout Trader. Take care till next time. Breakout out.